What's up, everybody? My name is Joe Brown, and this is Heresy Financial. Want to give you guys a quick technical update on what is happening with silver because I just don't want you to get shaken out here. I know that we've had some pretty severe sell-offs, actually more recently that's been happening in gold more than it has in silver. But as you can see here recently, we have had a big sell-off in silver. Just want to provide a quick update here on from a technical analysis standpoint what silver looks like because it looks pretty good. If we take a look here, what we have seen form over the last year really is an ascending triangle. And if you're not familiar with technical analysis, quick disclaimer: number one, it's not a crystal ball. Number two, it's really just a visual representation of group behavior patterns. And these patterns, you can see them emerge visually, like in these, like this is one, it's an ascending triangle right here. And it's just representative of what the buying and selling behaviors of the group, everybody who's buying and selling, actually are. And so it's just a way to gauge quickly kind of what the group dynamics are, what the kind of the crowd is doing on any particular stock or asset. So what an ascending triangle is kind of obviously you can see the triangle, the three parts of the triangle. The top you can see is a horizontal line here. Now the horizontal line that's right here is giving you an indication that the sellers haven't been able to push down the price from the swing highs. So every time it reaches a high up here, you're seeing it hit the same high before it bounces back down. On the other hand, if we look at this trend line from the swing lows, we can see that the lows are continually increasing. Now, this isn't an exact science, obviously, and so this is a little bit messy with where we place the line here. Obviously, you might be able to move it down here, and then you get 3 contact points. If you move it a little bit higher, you get more points in which the price actually contacts your line. So it's not an exact science here. We're just gauging the general price action in general where it's moving. But the psychology, the group psychology, the buying and selling, the supply and demand dynamics that are going on here that's causing this is basically the buyers are coming in and they're beating the sellers to push the low prices up higher and higher. Every time the price comes down, buyers are able to overcome the sellers at higher and higher prices than they hit last time, and that's not happening. At the top, the sellers aren't overcoming the buying pressure at the top to lower and lower extent. And so, an ascending triangle is typically considered a continuation pattern, and that basically just means that when you finally break out, you would tend to expect that it would break out to the same direction in which it was headed before the formation began. And so obviously it was headed up before this triangle began. So you would expect then that once we get a legit breakout and not a false breakout, that it would continue going the same direction that it was going before this formation started here. You can also look at triangles as kind of a consolidation, like a coiling of the spring. This energy is kind of being compacted because, to be honest, even from where it was at, down here in this range from $19 down to I can't see because my face is there, $14, down in this range, just to get from that range all the way up to a high of this $29 range. That takes a lot of energy. A lot of money has to go in to not only buy up just the normal amount that was keeping it in this range, but also to soak up all the selling pressure all the way up there, and then that buying pressure has to continue and overcome any profit takers, any sellers, any selling that's happening up in this range. And so It takes markets a long time to kind of recoup or recover from large, drastic moves. And so you tend to see a big move followed by a consolidation period where the range in which it's trading in gets tighter and tighter and tighter while the market kind of figures out where it's going to go next. Who's going to win, the buyers or the sellers? And so that's another thing that's happening in these triangles. You can just picture it like it's a spring that's getting compressed. And when it breaks out, now you've built up enough energy where there hasn't been much volume outside of that very tight trading range for a while now. And so you've built up some energy, you've coiled that spring, and when it finally does break out, it can break out and do make a significant price move from there. Now, just keep in mind, it tends to be a continuation pattern. That doesn't mean it's guaranteed to. So if we do end up breaking down for whatever reason, you could see a vicious move back down. Let me put this on put it on a weekly chart here so we can kind of zoom out a little bit and see it in more historical context here. If we look at where this resistance is right here at about 29 or 28.50, where we've kind of seen the top right here. That's historical support and resistance back here during 2011, 2012. The next point in which we see some historical resistance, I would guess it would put us right here up about the $35 range. So if we do break to the upside here, I would expect a relatively quick move up to the $35 range. And the final thing to note here is profit targets from the ascending triangle formation itself. And so typically what you would set as kind of like a profit target, or where you would expect the movement to end once it does break out, you would expect the move to be about the same size as the thickest part of the triangle. So right here we have 20, 22 at the bottom, and then up here we've got let's just say, to make it easy, 28 at the top. So we've got a $6 range from the bottom of the triangle to the top of the triangle. And so then you would expect that if it breaks to the upside, that you would see a $6 move to the upside. And so that would put us right at 34 here. Now, if you take a look, the nice thing is that really corresponds nicely to some support back here in 2011, and then resistance over here in 2012. And so, with my expectation that it comes up to about 35, and this formation itself putting it at about 34, I'm okay with that. I like it when multiple things correspond together. So when you see an ascending triangle forming, and then you'd expect that a breakout would take it to a certain price, and that price just happens to coincide with prior support and resistance, that's a nice touch. I like it when multiple signs start to converge together. So that's where you'd expect if it breaks to the upside, and then if it breaks to the downside, you come back down here and start again with something else. So that's what I'm watching here. Now, I'm not expecting a breakout, extremely soon here, just because these things take time, and we've seen it's taken a year to get here, and we've still got some room to go. I mean, you don't always see the entire triangle filled by volume, but if you, even if we expect that it's going to break out on its next move up, that could still take a couple of weeks, maybe a couple of months to get all the way back up, up above this 28.50 line. So that's what I'm watching in silver right now. And every time we kind of have a big sell-off, we see people get shaken out, but the buyers come back in and push that price right back up. The buyers are beating the sellers here. And so that's what I'm watching as far as charting from a technical perspective on what is happening with silver. And I would not be surprised at all to see this break up to the upside and hit 35. That's kind of my next target for silver. And usually these things, they coincide with fundamentals. So usually there's some sort of news event or economic data that comes out or something like that that corresponds with it. And when you look back at history, you can see, okay, there are these big moves where you notice patterns. In hindsight, you notice these patterns that form on the charts, that are typically they go hand in hand with something fundamental that's the driver. So these these chart formations are really just visual representations of the buying and selling patterns that are happening from a fundamental perspective. So that's what I'm watching on silver. Just a quick update. Wanted to let you know what I'm looking at here. And if you like this charting software, if you've been looking for a new one because maybe your broker doesn't offer one that's very good, this one is called TradingView, and I've been using it for a while now. I really like it. It's got a ton of tools. It's really easy to use. They've got an iOS app, an iPad app, Mac, Windows. They've got a web app too, and so they're fantastic software. If you use my link in the description, you'll get $30 towards an upgraded plan. So check them out if you're looking for a good charting tool. As always, really appreciate you guys. Thanks so much for watching. Have a great day.